Welcome to Connection Card Pro. In this tutorial, I will help you understand how to set up and use your chart of accounts within Connection Card Pro. A chart of accounts is a common phrase used in the accounting and bookkeeping world. It represents that accounts that your organization's balance sheet and ledgers are separated into in order to help you better understand the financials within your organization. In this tutorial, I'll be providing a general overview and understanding of a chart of accounts. And though I'll be showing you how to apply this to your Connection Card Pro account specifically, this information can be used to understand your organization's chart of accounts, regardless of which software you are using. We will focus on 5 types of accounts: assets, liabilities, equity, income, and expense accounts. Equity accounts are also known as funds. In the for-profit world, you simply have one equity account. This is the owner's equity in the company. However, in the non-profit world, we use funds. These funds refer to separate ledgers within your organization, allowing you to keep funds completely separate from other funds. In some cases, when you receive grants or other specifically designated funds, you are required to keep those in a separate ledger. This makes it easier for the granting entity to audit accounts, allowing you to provide a copy of the ledger and transaction statement which only show transactions specific to those funds, and not all of the other transactions within your organization. We recommend setting up your funds first. Most organizations may only have one fund or ledger. However, you can create as many as you require. You may create a fund under unrestricted net assets to represent your general and operating funds. You may also create separate funds under restricted net assets if you are required to maintain a separate ledger for any specific funds you've received or which may be designated toward a capital building campaign. An asset account represents any physical or tangible asset that your organization holds. This may be a checking account, a savings account, or even large assets, such as buildings or equipment. In Connection Card Pro, your account starts with some preset accounts in your chart of accounts. You can remove or modify these presets, or create an unlimited number of additional accounts. Typically, we refer to bank accounts or other liquid assets as current assets. And we refer to the long-term physical assets, such as buildings, property, or equipment as fixed assets. You should create a separate asset account for each asset or liquid account which is represented. If you have multiple bank accounts, you should create a separate asset account for each of those bank accounts. In Connection Card Pro, click on the Add New Account button next to the category. Enter a number for this account. This is a number used internally to help organize your chart of accounts and should not correspond to actual bank account numbers or any sensitive information. As is common in the accounting world, we suggest that account numbers be 4-digit numbers with asset accounts beginning with 1, liability accounts beginning with 2, income accounts beginning with 4, and expense accounts beginning with 5. You can then use the second and third digits to help group related accounts more specifically and use the 4th digit to distinguish each unique account. However, that is only a recommendation, and you may number your accounts however you wish. Then, enter a name for this new account. For asset accounts, you can choose an account type. Choose None, Register, or Accounts Receivable. If you choose Register or Accounts Receivable, then you will be able to view and edit the register of this account as if it is a bank account, and we assume that there will be many transactions belonging to this account. For fixed assets which you do not want to keep a register for, you can choose None. Then, choose the appropriate activity which best represents this account. Optionally, this account can also belong to a parent account. In that case, we recommend the account number being a 3-digit number, such as 001 and counting upward, as this will be appended to the parent account's account number. Asset accounts are anything that your organization owns. Liability accounts, on the other hand, represent anything that your organization owes. This could represent a credit card with lots of revolving transactions and balances that are being added to and subtracted from as they are paid off each month. Or, this could be a long-term liability such as a bank loan or a mortgage. Liability accounts can be created in the same way as asset accounts. Asset and liability accounts make up the balance sheet of your organization, allowing you to see a snapshot of your organization's current assets and liabilities. You can generate balance sheets by going to Reports, Financial Reports. Next are income and expense accounts. Income and expenses account operate very similarly. Income and expense accounts do not appear on your balance sheet. Instead, they are used to create your organization's income statement. Likewise, asset and liability accounts do not appear on your income statement, they only appear on your balance sheet. Transactions are associated with income accounts whenever money is coming into your organization, that is, whenever the balance of your asset accounts is being increased. Income accounts should represent the source of the money, or where it came from. Typically, income accounts should not represent what the money is meant for or designated for. If you are tracking what money is designated for, depending on how you'd like to structure things, you can either track that in sub-accounts of your asset account, use funds, or our recommendation is to use tags. Connection Card Pro allows you to create an unlimited number of tags to tag transactions with a specific purpose, project, fundraiser, ministry, or department, among other things. Tags can be used to generate tag reports for internal use. Generally, your income statement is what is reported to the government when you have reporting obligations. So, the government doesn't care how you've earmarked funds to be used. They only care where they came from. Income accounts could represent rental income if you are renting your building or equipment out for a fee, domestic contributions when local donors are donating to your cause, foreign donations, if you are receiving donations from outside of your country, grants received, or any other source of revenue. You can also create your income accounts as specific as you'd like. If you'd like to separately track income received from online giving versus in-person giving, or to separately track program revenue when you are running events or classes which generate income. Lastly, expense accounts are used to specify how the money is spent. Whenever a transaction is recorded for an expenditure, you will link that transaction to the appropriate expense account. Some examples of common expense accounts may be utilities, study and discipleship materials, building rental, food and meal expenses, to name a few. Typically, your mortgage payments or large equipment purchases would not be represented by an expense account. That is because your mortgage is a long-term liability, and your building is a fixed asset. Payments made to the mortgage will be applied to the mortgage liability account to lower the balance of your mortgage liability, rather than being deemed an expense. And large equipment purchases would be linked to a fixed asset account, rather than an expense. To remember what income and expense accounts are, you can just remember that income accounts show us the where, and expense accounts show us the how. Where does money come from? How is it spent? In Connection Card Pro, every transaction you record will be associated with one fund and two or more accounts. One of these accounts is the register. This is where the money changes hands. The second account is the asset account or liability account, which money is being transferred to or from, or is the income or expense account, which represents the income or expenditure taking place. Transactions may have multiple line items. For each line item, you can choose an additional account which represents that specific line item, but all line items are connected to the same register and fund. I hope that this tutorial has helped you to gain a basic understanding how your chart of accounts works, whether you are using Connection Card Pro or any other software for tracking your organization's finances. Thanks for watching.